Shah of BOFA Securities has gone ahead and written a very interesting note. Now, when we talk about this strategy note, this is one of its kind notes, and pointing out that one in their portfolio has to move towards the defensive pack. Why they are saying so is because they are turning slightly cautious as far as the Indian market goes. There are 3 or 4 reasons that they have highlighted. One, of course, is the rise in the COVID cases that you're seeing in the second wave are very sharp, and they are increasing quite sharply. So this is the first risk that they highlight. Then commodity prices have gone up, and that is another risk which they have highlighted, which can have an impact on demand as well as margins. Then they go ahead and say that yields across the globe are also rising in, which means that flows could be slightly jittery in the near term, and all of these combinations put together makes them believe that one has to turn cautious at this point of time. They have not downgraded India, but on the other hand, they are saying that there could be a tactical correction in the Indian market. Now, what they are advising their clients to do is slightly go on the defensive side. So basically, risk on is something which they would avoid, or they have reduced their weightage. They have trimmed down their positions on financials, on industrials, materials, and further allocating it to names like Staples as well as Pharma. Even IT makes it as a part of their list, and that is also something which they are looking at. Now, on a fundamental basis, they believe that they really see a recovery coming in, but at the same time, localized lockdowns could have an impact on this entire recovery. Localized lockdowns will be one of the key phenomena. They believe that localized lockdowns will continue among the rising COVID cases, and that is definitely something that investors should worry about. In terms of the top picks that they have, so it's a mixture of the defensive pack that they are talking about, and they have skewed their portfolio more towards the defensive names. Now, from the report that he has written, some names that I can pick up. So in the technology pack, they like Infosys, they like HCL Tech, they as well as like Tech Mahindra as well. You have HUL, Dabur, Britannia, which makes it as a part of the FMCG pack. Dr. Reddy's, Cipla, Gland Pharma is something which they like as far as the pharma pack is concerned, and even a name like NTPC and Power Grid is something which they have put into their defensive list. So that is something which they are advising their clients. Now, they are not expecting nationalized lockdown, unlike what you had seen in April 2020, but there is limited appetite, and that's why people will have to put state lockdowns, and states will increasingly do that. Media reports, according to them, suggest that Mumbai, Delhi, Ahmedabad are witnessing shortage of bed, oxygen supply, higher turnaround time, and all these things will also have an impact as far as the entire COVID situation is concerned and how it is going to be handled. Last time around, they highlighted that migrant labor was one of the big issues. Supply chain issues were likely. This time around, also, they are expecting that a little bit of this would happen, but at the same time, they are expecting that it may not be as intense as what it was earlier. Logistics, particularly, may be better than what was earlier. Supply chain may be better than what was earlier given in the first lockdown that we had.